Hey, what's up, stock compounders? Brad here. So, yesterday, Phil Town did a live stream where he talked about Seritage growth properties. And in that live stream, he said he thought the dirt for the properties owned by Seritage, the former, Kmart and Sears properties, the dirt alone was worth $17 per share. Okay. So let me walk you through some of my highlights from this live stream from Philtown yesterday, and I will link to that Facebook live stream in the description. But first, I want to give a big shout out to Dive the World, who made me aware of what Phil said in this live stream yesterday. He's come through for me a few times. Keep it up, Dive the World. Appreciate you, brother. Okay, highlights from the live stream. So Phil Town was asked, what do you like about SRG, Seritage Growth Properties? He said, well, it's being funded by Berkshire Hathaway. Buffett owns 5%. Eddie Lampert owns 40%. Now, when you look at the equity, it looks like Eddie Lampert owns less than 40%. But I think Eddie Lampert owns these operating partnership units, okay? And there's a decent chunk of those that can be converted into common shares. And then he says, Buffett and Eddie Lampert, they're really good Rule 1 style investors. They really focus on investment opportunities where the downside is protected. And that's really what I'm gleaning from Phil Town saying, the dirt is worth $17 per share. To me, that's kind of what his target is for the full downside. If this thing goes to hell in a handbasket, at least the dirt is worth $17 per share. He says they're going to continue to develop very well located real estate for the next decade, possibly even longer than a decade. So this isn't a get rich quick stock, but the downside is, like I said, very well protected. And if you're willing and able to own this thing for the long run, 5 to 10 years, there's potentially a lot of upside. They also have a lot of flexibility about how they can develop these properties depending on what the highest use is for the real estate. Say retail is taking a dive because of the pandemic, because everybody's moving online. There's some flexibility to, build multifamily instead, or, maybe Amazon fulfillment centers, whatever it is. They haven't fully committed to, what the end vision is for a lot of these properties. So that's a benefit, that flexibility. Phil Town thinks it's going to get back up to around $60 per share in the near term. Okay, it's between $15 and $16 per share as of today, September 4th, 2020. So that's nearly a 4x upside in the near term. And knowing Phil, I presume the near term is say 2 to 4 years, somewhere in that time range. So that's pretty good. You can get a 4x in 2 to 4 years. Now, this isn't investment advice. Of course, do your own research. Phil Town, even in this video, says, huge disclaimer, this is not investment advice, but it's certainly interesting. And then finally, he gets in a little bit in terms of how to assess the value of a company like Seritage Growth Properties. As a real estate investment trust, it makes sense to start with the real estate. What are the properties worth? Okay, so that's really what I'm taking on. They own 170 odd properties outright. They have joint ventures in another 30 to 40, somewhere in that range. So my big goal right now is to figure out, how do I value the actual properties, value each property, ideally based on sale comparables. So properties that are similar that sold in the area recently, maybe within the last year, ideally within the last 6 months or so, while we've had the effects of this pandemic on sale prices. So I'm going to be looking at comps for sale, properties that sold that are comparable, and also comps based on rental income, right? Based on similar properties, what rents are being generated, what are the NOIs, the net operating incomes on those properties, and then using an area specific cap rate, we can back out what the real estate is worth from that. So yeah, so that's all I wanted to say from Philtown. Take a look at this video though. It starts kind of at the end of 25 minutes and then goes through minute 29. So it's a 40-minute clip, but really just 26 through 29 is when he's talking about Seritage. But if you want to take a look at those properties that they own, go to Seritage's investor page. So you just find seritage.com, you click on investors, and then click on this most recent link here, the Q2 2020 financial supplement. And if you scroll down to page 17, you can see their wholly owned properties, okay? And they have the addresses there and all of that. They have the total leasable area for each property, what percentage of it is currently leased. And then this is what Phil was alluding to here, the land acres. How large is the site? Okay. A lot of these sites are pretty big, especially if you look at the California properties in really desirable areas. The Los Angeles metro area, there's a number of properties. When you're talking a dozen or a couple dozen acres in an area like that, you're talking big time real estate value. So I'm excited to dive into these and try to value them. One of my approaches to that, so I recently signed up for a 1-week free trial with Reonomy. So Reonomy is one of these tech startups for commercial real estate where they claim it can help you find properties to buy, value properties, all of that stuff. Now, when I used Reonomy for the first 4 or 5 of these properties, I wasn't really getting anything. There weren't any comps. The best I was getting was information from the tax assessor of what the land value is and what the kind of the total improved value of the property was. But I'm not keen on, I don't think those figures are going to be very accurate in terms of finding a current value for this real estate. So my kind of front runner right now is CREXi. It's $150 a month. I figure I can just sign up for 1 month, get all the info I need, and then paying $150 to get somewhat accurate property values for these 170 fully owned properties sounds like a reasonable deal to me. The gold standard for assessing commercial real estate is CoStar. But I think, a subscription to CoStar is thousands of dollars. So I'm not super interested in that. Hopefully CREXi has enough data to get me some decent comps so I can reasonably approximate what the current value of these properties are. But if you guys know of any other commercial real estate software that might be good at providing comps or estimates of value, let me know. I'm very curious to explore those as well. But yeah, I'm excited, guys. I'm excited to just start looking these up with a reputable service to come up with what is the scrap value if these properties need to be sold in the event that the economy tanks in the next year or two. And of course, what is the upside as well? What are comps based on full rental income from similar properties? That's also very interesting to me. So just kind of using comps to find the maximum downside, and also, you know, a reasonable picture of the upside is kind of what I'm going for here. So that's my project ahead. Exciting, guys. Philtown, $17 per share. He thinks is what the dirt is worth in these properties that are owned by SRG. So, like I said, I will link to that Facebook Live from Philtown. I'll also link to this document here where you can find the wholly owned properties. And then just above this, you can also find the joint venture properties if you want to really go into the rabbit hole and estimate the value for SRG's share of these joint venture projects. So I will leave you guys with that. And yeah, see you in the next video. Take care.